Welcome back to our channel, Inspire and Aspire. In this video, we would like our viewers to get a broad understanding of investing in stock markets through one of the best-selling books on this subject, The Intelligent Investor by Benjamin Graham. The Intelligent Investor by Benjamin Graham is a classic book on investing that provides a comprehensive guide to value investing and a long-term perspective. Here's what we can learn from each of the chapters of the book. Chapter 1. Investment versus Speculation. In this chapter, the author distinguishes between investment and speculation. He defines investment as the process of analyzing securities and investing in them for the long term, while speculation involves making short-term bets on the stock market without thorough analysis. Graham emphasizes the importance of avoiding speculation and focusing on sound investment principles. Chapter 2. The Investor and Inflation. Graham discusses the impact of inflation on investments. He explains that inflation reduces the purchasing power of money over time, which can erode the value of investments. The author suggests ways for investors to protect themselves against inflation, including investing in inflation-protected securities and diversifying their portfolios. Chapter 3. A Century of Stock Market History. The author provides a historical overview of the stock market, highlighting the importance of analyzing market trends and understanding the cyclical nature of the market. He explains that the market experiences cycles of growth and decline, and that investors should be prepared for market fluctuations by maintaining a long-term perspective. Chapter 4. The Defensive Investor. Graham introduces the concept of defensive investing, which involves a more conservative approach to investing that minimizes risk. He suggests that defensive investors should invest in a diversified portfolio of stocks, bonds, and other securities, and should focus on minimizing fees and expenses. Chapter 5. The Defensive Investor and Common Stocks. The author discusses how defensive investors can invest in common stocks while minimizing risk. He emphasizes the importance of diversification and suggests that defensive investors should only invest in stocks that meet certain criteria, such as a high level of earnings and a strong balance sheet. Graham also explains the concept of a margin of safety, which involves investing in stocks that are trading below their intrinsic value. Chapter 6. Portfolio Policy for the Enterprising Investor. Negative Approach. Graham introduces the concept of enterprising investing, which involves a more aggressive approach to investing that seeks to achieve higher returns. He suggests that enterprising investors should focus on identifying undervalued stocks and should avoid investing in overvalued stocks or companies with poor financial performance. Chapter 7. Portfolio Policy for the Enterprising Investor. The Positive Side. The author discusses how enterprising investors can identify undervalued stocks and invest in them for long-term growth. He suggests that investors should focus on companies with strong earnings growth and should avoid companies with high debt levels or poor financial performance. Graham also emphasizes the importance of thorough analysis and patient investing. Chapter 8. The Investor and Market Fluctuations. Graham emphasizes the importance of maintaining a long-term perspective and avoiding emotional decision-making in the face of market fluctuations. He suggests that investors should not be swayed by short-term market movements, but should instead focus on the long-term performance of their investments. Chapter 9. Investing in Investment Funds. The author discusses the benefits and drawbacks of investing in investment funds, such as mutual funds. He suggests that investors should carefully evaluate the fees and expenses associated with these funds and should choose funds that align with their investment objectives and risk tolerance. Chapter 10. The Investor and His Advisors. Graham provides advice on selecting and working with investment advisors. He suggests that investors should choose advisors who are knowledgeable, experienced, and trustworthy, and should avoid advisors who have conflicts of interest. Chapter 11. Security Analysis. General Principles. The author introduces the concept of security analysis, which involves analyzing a company's financial statements and valuing its stock based on its intrinsic value. He explains that investors should focus on the company's earnings, dividends, assets, and liabilities, and should calculate its intrinsic value based on these factors. Chapter 12. Things to consider about per-share earnings. In this chapter, Graham explains the importance of per-share earnings in evaluating a company's financial performance. He suggests that investors should look at a company's earnings per share over a long period of time and should adjust for any unusual events or accounting changes that may distort the earnings. Chapter 13. A comparison of 4 listed companies. The author provides a detailed analysis of 4 different companies to illustrate the principles of security analysis. He demonstrates how to evaluate a company's financial statements and calculate its intrinsic value, and emphasizes the importance of using conservative estimates and adjusting for risk. Chapter 14. Stock Selection for the Defensive Investor. Graham provides guidelines for defensive investors in selecting stocks for their portfolios. He suggests that investors should focus on large, well-established companies with a long history of stable earnings and dividends, and should avoid companies with high debt levels or speculative investments. Chapter 15. Stock Selection for the Enterprising Investor. The author provides guidelines for enterprising investors in selecting stocks for their portfolios. He suggests that investors should focus on undervalued companies with strong earnings growth potential and should avoid companies with poor financial performance or excessive debt levels. Chapter 16. Convertible Issues and Warrants. Graham discusses the benefits and drawbacks of convertible securities, such as convertible bonds and warrants. He suggests that these securities can provide investors with a combination of income and capital appreciation, but that investors should carefully evaluate the terms and conditions of these securities before investing. Chapter 17. 4 extremely instructive case histories. The author provides 4 case studies of companies that experience significant financial challenges to illustrate the importance of thorough analysis and risk management in investing. He emphasizes the importance of evaluating a company's financial statements and assessing its long-term prospects before investing. Chapter 18. A comparison of 8 pairs of companies. Graham provides a detailed analysis of 8 pairs of companies to illustrate the principles of comparative analysis. He demonstrates how to evaluate a company's financial performance relative to its peers, and emphasizes the importance of using multiple valuation methods and adjusting for risk. Chapter 19. Shareholders and Management. The author discusses the relationship between shareholders and management and suggests that investors should focus on companies with strong corporate governance and shareholder-friendly policies. He explains the importance of evaluating a company's management team and assessing its commitment to creating value for shareholders. Chapter 20. Handling the investment portfolio. The author provides practical advice on managing an investment portfolio, including how to rebalance the portfolio, how to sell underperforming stocks, and how to reinvest dividends. He emphasizes the importance of diversification and patience, and suggests that investors should avoid excessive trading and emotional decision-making. Overall, The Intelligent Investor provides a comprehensive guide to sound investment principles and practices and emphasizes the importance of patient, disciplined investing over the long term. The book is widely regarded as a classic in the field of value investing and has had a significant influence on generations of investors. Thank you for joining us and hope you enjoyed learning about investing from the book, The Intelligent Investor. Don't forget to subscribe to our channel and share this video with your friends and family. Until next time, live your best life.